Good morning, everybody. Bienvenue en France et bienvenue en Normandie. First, I would like to thank the organizers for the invitation. They have asked me to talk about this subject. What if we could help you finance your world of opportunity in dairy and beef production? And what does a banker look for when discussing the future with farmers? So just before beginning my presentation, I would like to say a few words about Crédit Agricole. Crédit Agricole is a leader bank in Europe. We are the leading financial partner to the French economy. We are a cooperative bank, so our presidents are elected by the consumer, and we have 39 regional banks. And often the president of the president of the regional bank are farmers. We have 150,000 employees, 1/3 outside of France, particularly in Italy and in Poland. We have 49 million clients, and the net banking income is around 31.2. Agriculture is a key sector for Crédit Agricole in France. In Crédit Agricole SA, we have a specific department on agriculture and agro-food sector. Crédit Agricole is the agricultural sector leading financial partner. The market share on agriculture is 80%, and the total outstanding loans to agriculture is above 43 billion euros. We are also a leading provider of agri-food finance with a market share of 38. So my presentation will take 2 times. How Crédit Agricole sees the dairy market and the beef market, and after, how we finance dairy and meat producing farms. So according to the FAO and the OECD, over the next 10 years, the production will increase around 1.8% per annum. And you can see on the map that the production will increase everywhere, and particularly in South America, in Africa, and in India. The demand will increase around 2.3% per annum, so it will be above the increase of the production. So there will be tension on this market. The demand is driven by emerging market growth, especially China, and dairy market in developed countries are relatively mature. What about the world trade? We can see that in emerging countries, the dairy production will fade to meet the increase in demand, and particularly in Asia. If you see the particular case of China, you can see that the deficit between production and demand was around 2 million tons for the 10 previous years. And in 2023, the deficit could reach 15 million tons. So there will be a big problem in China, so they will need to import a lot. You can see on the graph that the trading volume will largely increase, and there will still be a large volatility. The issue for dairy manufacturers in exporting countries is to provide an efficient response to this growth in demand. So we can see that today there is a strong trend towards industry consolidation, an increasing globalization of world leaders. Mr. Nallet will speak about Lactalis. The globalization can take different form, acquisition or partnership. You can see on the map the level of investment exceeding $50 million for dry products, dairy products. And you can see that in Europe, in America, and in Asia, there is a lot of investment for dairy products. Of course, there is an emphasis of the importance of production quality. Of course, when there is a health crisis, it's very bad for the industry, so they look this point very carefully. What about Europe? You know that the dairy quota will end in April 2015. So there will be no surprise. We think that there will be no surprise. The North-South European countries are showing, as expected, the ability and the intention to increase their dairy production substantially. And in the south and the east of Europe, the increase will be less important. Of course, the quality of European production is an objective sustainable asset for the dairy industry. The quality is at the farm stage and, of course, at the industry stage. What about France? Of course, we have some area with a very dynamic production. You can see on the map that in green, it's the department, the areas where the dairy cow head count are increasing, and in the red, the place where there is a decrease in the dairy cow head count. And you can see that in the west and in the north of France, there is very dynamic production, and in the southwest of France, there is more difficulty. The French dairy sector is suffering badly from a sluggish domestic market, compounded by the price war between hypermarkets. So in front of that, the industry are taking action to limit this problem. For example, measures to increase the bargaining power or investment in production facility for export products to have alternative to the French market. Now the beef market. You can see on the graph that there is an increase in production around 22% over the 20 previous years. The per capita consumption are more volatile. In developed countries, there is a reduction because of population aging or dietary concerns. But in emerging countries, there is an increase in per capita consumption, of course, because of the increase in purchasing power of growing middle class, like in a dairy market. The economic crisis prompts consumers to adjust their spending. Accordingly, there is significant fluctuation in demand depending on price, of course, and with a much higher processing rate and a longer period of fattening, beef is much more costly to produce than poultry and pork. So the international trade in beef and live cattle is significant and growing. You can see on the map that there is 3 major regions involved in exports: South America, Oceania, and more recently, India. The Far East is the main destination for beef imports, and we have a very high growth, particularly in China. The meat, slaughter, and processing industry is dominated by global players. Often they work on different meat, they work in different countries, and they are involved in different stages of the production, like animal feed, the farming, the slaughter, and even distribution. The beef in Europe, livestock is declining while consumption is also declining and going down market. There is sometimes substitution between beef and poultry meat. In Northern Europe, there is generally dairy oriented, and they have enough resource required, like animal feed or water. So they are structurally exporter, and they respond quite well to the evolution of demand. In the Southern Europe, they are importing meat. Export of live fattened cattle undoubtedly represent a long-term market, particularly to southern and eastern Mediterranean countries. So you can see on the graph that according to OECD forecast, the beef consumption by a country in Algeria and Egypt, the share of import will increase in these countries. For example, in Egypt, the consumption coming from a domestic production will increase of 17%, and the consumption coming from import will increase by 43%. So there is a place for European producer, but the volume required will fluctuate significantly. What about France? The household consumption is moving inexorably toward minced and processed products. So the fattening of your cattle can be a response to this change, but we know that there is difficulty to expand this fattening of young cattle in France. Now a lot of young cattle are exported to Italy, but we know over the 3 or 4 last year that there is a decrease in the Italian market, so we have to fatten in France. With the end of dairy quota, there is a retention of livestock, which should lead to a specific shelf-life price increase. And last thing, you know that there is a big reform in the common agricultural policy in Europe. Each country has some flexibility to implement this reform, and France makes the choice to target the use subsidy towards stock cow and not fattening. So we will have a lot of issue to develop fattening in France. In summary, many opportunities exist in world dairy and beef market, including the European and beef and French producer. Of course, this will not be easy because there is a lot of competition. It's important to acknowledge a challenge, and it is essential to anticipate and to adapt. Now, how we finance dairy and meat producing farms. Just before beginning this part, I would like to remember how does a bank work. It's a partner that is there for long term. A bank receives money in the short term in order to lend it in the medium term. So we conduct our activity in a strict and increasing regulatory environment. A bank takes some risk. Of course, we will never be sure that a borrower will repay his debt, but we cannot take all the risk. We heard often that we are too chilly, so it's a difficult equilibrium to find. So bankers are experts in financing and reducing risk. And above all, it's a relationship between people based on trust. If there is no mutual trust, it's not possible to work with a farmer. What will the decision maker look at? So the major thing is to analyze the coherence of the project. Of course, the economic coherence of the project, investment in line with the level of the business, If it's not the case, there will be big problem on the project. A coherence between the entrepreneur and the project is if the farmer has not the skill to make the project, there is a high probability of failure. And if the farmer fails, of course, it's dramatic for him first, and of course, it's not good for the bank. Coherence of the strategy in relation is the environment, economic, financial, commercial, family situation. So we have to see that carefully. Coherence between the type of finance and the business different need. So a short-term investment should be financed with a short-term loan and long-term with long-term. So it's, we have to fit the type of financing to its purpose. Financial coherence and the coherence of the guarantee proposed, guarantees on assets finance, guarantees by external organization and undertakings by the entrepreneur. So the virtue of project, we have an overall approach. So of course we have to see the feasibility of the project. We have to see the manager, the farm and its environment and the project. So to analyze correctly all this data, we need a specific organization and a specific knowledge. So each project needs a special analysis. And in dairy and beef production, it's very difficult to have an industrial analysis. We need to have a case-per-case analysis. So financing beef and dairy businesses. So you can see the data for Crédit Agricole. So the change in financing, there is an increase of 3% between the 6 first months in 2013 and the 6 first month in 2014. Whereas the total amount of financing in agriculture was clearly stable for Crédit Agricole, so there is more dynamic in beef and dairy production, and especially in dairy production. The problem to finance beef and dairy business is low profitability compared to other types of agriculture, significant capital invested, and a need of big cash management. There is significant productivity investment and working capital requirements. So to avoid the problem, we have to have long-term financing compared with other types of farming. There is always a crisis management owing to increased price volatility. You can see on the graph in 2012, it's the amount of short-term financing, and you can see for the milk, because of the decrease of price of the dairy price and the increase of feed cost, the farmer needs more short-term financement, and of course we be with the farmer to help them in this period. Of course, where we analyze a project, there is very important to see the downstream operation. The good relation between the farmer and the industry is very important, particularly in the dairy sector. And of course, the manager's qualities are more vital than ever. The environment is more complex. We have less common agricultural policy. There is more price volatility, but we have seen that there is a lot of opportunities, so these qualities are more and more important. And to conclude, in order to conduct our business as bankers successfully, we also work on several strategic priorities. Installation, we have to help farmers to have a new farmer in France, and we need financial engineering to make that. Sector knowledge, of course, to make all this analysis, we need to know a lot of things for this sector. So it's something that we have to do very often. And safeguarding farming businesses, we have to strengthen the agricultural holding financial basis and to define a coherent strategy and provide comprehensive agricultural insurance.